Shares of Chinese tech giants trading in the United States plunged Tuesday for a third consecutive day amid intensifying concerns over China's efforts to impose tighter regulations on its publicly traded companies, yielding market value losses of more than $140 billion for the 10 largest U.S.-listed Chinese stocks this week alone. The Nasdaq Golden Dragon China Index, which tracks Chinese businesses trading in the United States, is down 6% Tuesday and 13% this week. The index is at its lowest point in more than a year after posting its biggest two-day drop since 2008. It can be expected that some investors will swoop in and view these events as a major buying opportunity within the booming Chinese economy, and they may have a point. These shares do look like bargains, Green said of the plummeting values, before adding, however, they must exercise extreme caution as the situation remains highly unpredictable and any further similar actions, or even suggestions, from Beijing will mean more sustained volatility and sell-offs. In a matter of days, China introduced harsh regulations targeting the nation's education companies, showing investors how risky investing in the market can be, Tom Essaye, author of the Sevens report, wrote in a Tuesday note. Yes, there's a huge market and lots of growth potential, but obviously there are regulatory risks that seem to be growing larger with every passing month, noted Essaye. In its weekend order, China's education ministry explicitly barred capitalized operations among online training institutions, saying such companies can no longer turn a profit or raise money in the public markets. Those who have violated regulations shall be cleaned up and rectified, it added. $12 billion. That's roughly how much US and European-based investment banks could lose as a result of the plunging shares in Chinese education stocks. European investment banks may have lost some $12 billion as Chinese education firms crashed. Forbes, China's Internet Tycoons suffer $13.6 billion wealth drop as regulatory crackdown triggers market sell-off. Forbes.